Hello, this is Patty Gilbert with Nolan Business Solutions, and we have just started the Integrated Business Accounting webinar. My plan is we'll go through a few PowerPoint slides talking about the functionality in Nolan as a company, and then we'll switch over to NetSuite and actually do a live demo and walk through some of the setups of how Integrated Business Accounting can help solve some intra-company requirements that you might have. Okay. We are going to save all questions till the end of the presentation, and there is a question tab on your GoToWebinar toolbar. So if you have any questions as we go, feel free to type them in there, and then we'll address those at the end of the presentation. So Nolan Business Solutions, we've been around for 30 years as a company. We've been working specifically with NetSuite since 2006. I'm located here in our Boulder, Colorado office. We also have our main corporate offices over in the UK and with some other folks throughout the US and Canada as well. We're very involved in the NetSuite community, as you can see on our list of company information. The solutions that we have for NetSuite, we originally got started with NetSuite by building the fixed asset management module back in probably around 2006 when we started working with NetSuite. That module was actually purchased from us by NetSuite in June of 2011. So if you're using fixed assets and you got it from NetSuite, it was originally written by our development team. We also have an electronic payment module to pay your vendors electronically, and an advanced bank reconciliation tool to help automate the bank rec process. But today we're going to focus on our brand new product, Integrated Business Accounting. And Integrated Business Accounting is basically a simple way to add some intra-company functionality within your NetSuite instance. So this functionality was originally designed to kind of solve a need for people who are just on NetSuite that don't have NetSuite One World and don't have subsidiaries, but still have a need to record due to, due from transactions between different divisions, funds, or companies within that instance of NetSuite. That doesn't mean it's limited to just companies that have NetSuite. We had multiple people actually at Suite World asking us, could we use this functionality with a One World instance? And you could. And so there's different scenarios where maybe One World is an inter-company solution for you with subsidiaries, but maybe you need to do some due to, due from transactions within a subsidiary. So this could be a solution for that as well. It's also good for companies that have lots of little small entities or funds, and you want to automatically be able to record some basic due to, due from entries within various transaction types in NetSuite that we'll go through. And Nolan, as I mentioned, we've been around as a company for a long time. We've been working with NetSuite for a number of years, but we also have products outside of NetSuite in the Microsoft world. And one of our most successful products in that Microsoft environment is an intercompany product. So we have lots of experience with different types of intercompany scenarios. So we wanted a way to bring that expertise into NetSuite. So that's what we're going to be looking at today. Some of the key features, as I mentioned, we can automatically create due to, due from entries. So some of the examples we're going to do, one would be a vendor bill, that we have a corporate company processing a vendor bill. They want to pay expenses that need to go to other entities. And in my example, we're going to use a parent company that owns sports teams. So they want to share the expense across those different sports teams, but they also want to keep track of, how much does each team owe to the owner. So we're going to be able to do that. So in our straight vendor bill, like we normally would, using custom segments in NetSuite, when we save that vendor bill, Nolan's going to create the due to, due froms for that relationship, showing how much the teams owe the parent company for sharing that expense with them. So it's really simple. It's all one contained journal entry that as soon as we hit save and we look at the GL impact, we're going to see the original entry of how we distributed the expense, but we're also going to see the intercompany transactions that the Nolan Integrated Business Accounting functions populated for us. And then once we've created all those transactions, kind of one of the key components is that we want to be able to report on those individual segments. So for each team, I want to be able to see a balanced balance sheet and maybe a P&L. So based on the way we're going to set up those segments, we'll be able to achieve that and see balanced balance sheets for all of our entities, as well as on a consolidated level, all those due to, due froms will net to zero. So basically the process that we're going to go through in just a minute when we switch over to NetSuite is that we're going to use the new NetSuite ability to set up custom segments. Those segments are going to represent each of your companies. Or in my example, I'm going to set up a segment for my parent company as well as each of my sports teams. So that those segments could represent a division, a fund, a company, an entity, whatever your label is. We'll set up those segments for all the different relationships that we want to track due to, due from entries for. What we may need to do, we won't need to increase our chart of accounts for expenses or anything like that, but we want to make sure that on our chart of accounts that we do have the proper due to, due from GL accounts that we can use for automatically posting these new entries based on our segment balancing. And then once we've got the setup and we've defined all those different do to, do from relationships, then we can start using the product to create some intercompany for us. And the examples I'm going to use today are vendor bills and journal entries, but we can also talk about how we can open it up for other types of transactions to achieve the results that you're looking for. So as we talked about, the key component is we're going to be creating these do to, do from entries automatically, with the end requirement is that you want to be able to do separate reporting for each of those different segments. So the main scenarios that we're going to focus on today are listed here, and we'll talk about those, but that doesn't mean we're necessarily limited to this. So as we were talking to folks at SuiteWorld, if you want to provide us with certain scenarios that you're trying to solve, we can take a look at how we can set up our system to be able to handle those requirements and kind of make a decision based on what your requirements are and looking at how we can set up the system. But for sure, what we're going to focus on today, which is going to meet a large number of the requirements, are vendor bills, like we discussed before, where one parent company is paying bills on behalf of their subsidiaries or their teams. In my example, we want to be able to share that expense across multiple segments, but just have the parent company pay that bill, but still create the do to, do from. So we're going to do an example of that. We can also do journal entries, and those journal entries could be similar to that vendor bill where we're moving money from expenses from the parent to the child companies, but we could also use journal entries if we need to reclass something between the sports teams and keep the parent out of it. So we can do, so think of, the original hierarchy as a parent is our corporate account, and then we have the segments as the different children. Then those children may need to interact with each other, and so those would be the sister companies listed here. So we'll do an example of that, including that reclass. All right, so some of the key benefits is that once it's set up, it's really easy to just automatically create those do to, do from entries in the background, with the goal is that we want to keep those sports teams, companies, divisions, and funds in balance. And as I mentioned, we don't need to create a whole new chart of accounts to be able to handle this scenario. All the child company levels are going to be at the segment, so we can use the same GL account and just distribute it to different segments to achieve the results that we're looking for. So the only increase to your chart of accounts would be new do to, do from accounts if they don't already exist. And then, like I said up front, that if you either don't have one world or you do have one world and you want to do intracompany entries within that same subsidiary, we support that. So here's our contact information. We can come back to that at the end of the presentation. Let's switch over to NetSuite now, and I'll show you what we're going to look at. So I'm just going to spend just a couple minutes kind of running through some of the setup so you kind of understand the structure, and then we'll actually do some real transactions. So the first key requirement is, even before we install the Nolan bundle that we're going to look at, is that we need to enable a feature in NetSuite. So it's on the setup, enable features on the Suite Cloud tab. The piece that's important to us here that our product leverages is the Suite GL functionality that's new to NetSuite. So we're going to use custom GL lines and custom segments. So the segments are going to be how we distinguish the different entities that we need to create relationships for, and then the custom GL lines will allow us to create that do to, do from entry that we're looking for. After we've enabled those features, then we can install our bundle. So our bundle is written inside of NetSuite, so to a user it's just going to run behind the scenes and look and feel like native NetSuite. It's not going to drastically change the way you enter a journal entry or a vendor bill. But here's the kind of the key components that our bundle installs for us. Okay, once we've installed the bundle, then we've got to kind of activate that plugin, which is basically saying that we're going to turn on the ability to use this new Nolan functionality by activating this plugin for the custom GL lines that we just enabled. Okay, once we've enabled that, we've got to create the custom segments. Okay, and kind of the key component here on the custom segment is that we're going to say when we're using this new custom segment, we want to have a GL impact when we're doing things with the segments, and we're going to come back to this list of segments in a minute. The next setup step is where we get to decide what types of transactions do we want this functionality to run on. So here for our custom piece, the IBA for Integrated Business Accounting functionality that we just activated, this is the window where we're going to tell it what types of NetSuite transactions do we want to create these do to, do from entries for. So the ones we're going to look at today are vendor bill, journal, and so on. But you can see there's a lot of other options that we could activate this for. Okay. All right. After that step, we want to just make sure in our chart of accounts that we have the correct due to, due from accounts created. So you can see I'm using account number 1700 range for my due to, due from. Kind of see my structure there, that the corporate would be the owner of these teams, and then we've got our Rockies, Avalanche, and Rapids as our teams. Okay, so we can set up the different combinations because corporate's going to have receivables from each of the teams. Each of the teams are going to have payables possibly to corporate, and then they may need to have, you know, due to, due from between the teams. So that sister relationship that we were talking about. So if you want all those to hit different GL accounts, you know, we can use the hierarchy in the GL to accomplish that. But our expenses and our revenues can stay the same GL accounts because we're going to use the segments to kind of trigger the intercompany from, not the actual expense account itself. Configuration setup, basically we just have to tell it what's the name of our top level. So we have one top level that's kind of think of as the parent. In this case, we called it the corporate office. In my sports team example, maybe we call that the owner, whatever. So we have one top level, and then below that we'll have all the different segments. So let's go ahead and take a look at those segments. And then I promise we're getting close to doing a journal entry here in just a second. All right, so the segment list, I filtered it down. We've got some other testing scenarios built into here, but its simplest form, we're going to focus on two of my teams, the Colorado Avalanche and Rockies, with the parent company. Okay, so I've set up those segments, and you can see that we can have a hierarchy in that segment. So we've got the parent level, the corporate office, and then I can have, you know, in this case, I've got the Avalanche as a sub to the parent. I could also have, you know, the Avalanche relationship to the Rockies as a sub record, a child record to the actual Avalanche itself. So we can set up different levels of hierarchies of these different segments. But the goal is just to identify those different relationships that you want to track due to, due from relationships from. So as you pick these different segments, if I have a combination of segments on my vendor bill or my journal entry, that combination is going to trigger the due to, due from entries. And the way it knows which accounts to use is what we call control accounts. So the control accounts are going to take those segments that we just set up, and then now we're going to identify what GL accounts do we want to automatically happen when we post an entry between those different segments. Okay, so if we do an entry where the corporate office is paying a bill and some of that expense needs to go to the Rockies and some needs to go to the Avalanche, we're going to pick the segment value. So in this case, we're going to pick, if corporate's paying a bill for the Rockies, we're going to pick the Rockies segment. And when I create that entry, based on that segment choice, where a corporate segment is selected for the top level and the Rockies is selected for the line item level on the vendor bill, then it knows to use the Rockies due to corporate and the corporate due from Rockies account combination, because that's what we've set up here. So we use the control accounts to kind of predefine what intercompany entries we want to automatically happen. So I'm going to show you some basic scenarios next. We can totally control what accounts we're putting here, so they don't have to be exactly set up like this. So a lot of times what we'll do is you describe a scenario that you're trying to achieve and what you want the end result to be, then we can back into what the control account setup needs to be. So we know, you know, what happens with the different combinations, and once we know what your end results want to be, we can plug those into these different control accounts to get the results that you're looking for. So we can have more combinations than what you're seeing here. So it can be super simple, or it can be a lot more complex depending on your different scenarios that we can walk through. Okay. All right, so that's the setup. So let's go do a vendor bill and see it in action. So we're going to do a new bill just like we normally would in NetSuite. The only change is that we're going to pick custom segments as we go. So everything else can be exactly the same as you're doing it today. Okay, so let's pick a vendor. Go ahead and approve it. So down here, I've added the custom segment at the header level because we need to say for the accounts payable side, so which entity, which segment is paying the bill. So in this case, my corporate segment is going to be paying the bill. So that's the segment that I'm going to choose here on the header level. Then for the line items, if I'm saying I have a rent expense that my sports team owner is paying, but they want to share that rent expense to each of the teams or the children, we're going to split that at the line item. So I'm going to use the same rent expense account. So this is Corp pays for Rockies. Okay, we'll use this as a description. So then we're going to pick the IBA segment, the Rockies. Okay. So that alone is going to tell me, well, now if I've got corporate office up here at the top level and Rockies segment down here, then I have a need. My segments are going to be out of balance. So that's when our IBA functionality will kick in and create a due to, due from between corporate and the Rockies. And then if I want to further the example and use that same rent expense again, but this time corporate's going to pay the avs, then I'm going to pick the avalanche as my segment here. Okay. And we could keep going. We could have a line for corporate. We could have a line for the rapids. You know, whatever those other segments are, we can split it lots of different ways. But in this case, we assume that in the accounts payable world, that our top level corporate parent is the one paying the bills, and then we can create the due to, due froms between each of those child segments back to corporate. Okay. So at this point, it's just a regular vendor bill. All I did different was assign those segments. And because my segments are all different values, that's going to trigger our tool to create those due to, due froms. If I did a bill and it was all corporate segment, then there's no need to create any due to, due froms, and it wouldn't fire anything off. It knows that if everything's in the same segment, that there's no need to create the due to, due froms. Okay, so let's go ahead and save this. Okay, now that it's saved, we can go look at the GL impact. And we can see my original entry is accounts payable and the 2 rent expense, but I've also got some due to, due from. So for my $1,000 where the corporate pays Rockies, I've got a $1,000 due to, due from between corporate and Rockies. And then the same for my $2,000 entry between corporate and the avalanche. So this due to, due from section is possible because of the integrated business accounting plugin and based on those control accounts for the segments that I selected on that particular bill. Okay. Now, if I had to void that bill, everything will reverse properly as well, including the due to, due from entries. It's all connected, and as long as we got the results we wanted when we first posted that entry, when we reverse it, we'll get the results to unwind it. Okay, so that's the first common scenario is that corporate's paying bills and we want to split that bill across various segments and have the due to, due from entries created. So that's the first example. Another common example will be with journal entries. And so the journal entries could be, you know, something similar. Maybe we're accruing some expenses similar to that vendor bill where corporate's paying some expenses that we're accruing and we want to split that across multiple companies. We would have the same results as we just saw with that vendor bill. Another thing we could do though with a journal entry is maybe I posted something to the Rockies that should have gone to the avalanche or vice versa. So we want to move some expenses between just the sister relationships or the sister segments. So we can do a journal entry now to maybe move some of that expense from one to the other and still have a journal entry created with the due to, due from. So let's just pick our rent expense again, and we'll say we're going to take $5,000. Send expense to avs. How about? Okay, so here we're going to say, all right, so we'll say this is avalanche is going to get that expense, and then we'll say the other $5,000 is the other side of it. Okay, so we're going to pick avs down here. Okay, so corporate's not even playing a factor in this one. It's just between, what did I do here? I picked the wrong one. This needs to be Rockies. Okay. All right, so my segments, I've got 5,000 debiting rent expense for the avalanche and 5,000 crediting rent expense for the Rockies. So I'm moving money from the Rockies over to, or moving expense over to the avalanche. So now we want our due to, due from to be between the Rockies and the avalanche. Okay, so that's all we have to do there is pick those segments and save. Okay, and now we can look at the GL impact. And we can see our original entry was just the 2 lines to move expense between the 2. And now we've got our $5,000 hitting the due to, due froms at the avalanche and the Rockies level. Okay. Okay, and actually I realized that that one it had corporate in the mix. So actually let's do another journal entry to show you a different combination. So I picked the segment where it was between corporate and avalanche and Rockies and corporate. So let's do a new journal entry and we'll pick a different combination. Okay. All right, so let's come down here. Same scenario, we'll use a different dollar amount. We're just gonna have the rent expense. Let's do $7,000. And this time, instead of picking Rockies and Avs, I'm gonna go a level lower. Okay, so I'm gonna say I want a relationship between the Avalanche and the Rockies. Okay, and then here we're gonna pick rent expense, and I'm gonna pick a different segment. And this time I'm gonna pick Rockies to Avalanche. So I think I picked a different segment than I meant to on the last example. So this time we're going to get a little bit more granular, and instead of having an entry flow through corporate like we did before, I think we kind of got the end results we wanted, but we had some entries on corporate that maybe weren't required. If I just want to go between Avalanche and Rockies back to Avalanche, I pick a segment lower in my hierarchy. Okay, and there's a different set of control accounts set up for this Avalanche Rockies sub segment hierarchy than there was when I picked corporate and the top level. Okay, so let's see similar examples, same rent expense, just debit and credit, but this time we should see the due to, due from specifically between Avalanche and Rockies. Let's look at the GL impact. Yeah, and so this time instead of seeing 4 due to, due froms with corporate in the mix, it's specifically between Avalanche and Rockies back to Avalanche. Okay, so that gives us the results that we're looking for, all just by picking a different segment. So if we go back to looking at the control accounts, you can see when on the first journal entry example, when I just picked the Rockies and Avalanche at this level, then the due to, due froms associated with that were specific to corporate. So they were both flowing through corporate. When I picked the Avalanche and Rockies and Avalanche, we can see now that corporate's, well, actually, we put in kind of a placeholder for corporate, but because corporate, our parent company, all those lines zeroed out because they're the same for both entities, that didn't even post, and we get the results that we're looking for, which is just the due to, due from between the Avalanche and the Rockies. Okay, so hopefully that makes sense from a initial kind of some simple examples of where we can use our product. We can also explore more complex scenarios once we have some real life examples from any of you that are interested so far. I'd be happy to welcome you guys to send us some scenarios, and we can play with the setups here to see if we can achieve the results, and also maybe get some feedback on what other types of transactions that you would be looking to use this for, and we can talk through that and have a more tailored demo to your specific scenarios.